Word. What's up? Hey, greetings, Dwayne, CFRN. We're going to do just a quick, rapid recap. Rapido. I'm not going to teach. I'm not going to preach. I'm just going to run through the alerts really quick and be done because I have a ton of stuff I have to get done. But this is important, and so I'm going to do this too. In fact, this is the next thing on my things to do today list. Oh, by the way, those of you that have signed up for the One Trade a Day, ta-da! Tomorrow, 10:30 a.m. Eastern. Notwithstanding some natural or man-made disaster, you'll be able to go to a website because I want to provide password protected pages. This whole email thing, it never fails. Somebody doesn't get the email. Not blaming you. I'm not even going to blame the email provider or the internet or myself. Because sometimes if you're not on the master list, if I have to manually send you your email because of all the other things I just mentioned not working properly, well then I forget, and so it is my fault. So we're going to do it this way, just like we've done it for the free trades. That's worked beautifully. No one has a problem. I just tell you when the next free trade is going to be issued. You go to that website, that web page. You have to log in with your username, your password, and it's there. The trade's just there. So that's what we're going to do with the One Trade a Day. Now, there will be 8 selections: S&P, Dow, bonds, soybeans, crude oil, the Russell, the Euro, and gold. Whatever you've subscribed to. I'm going to send you an email tonight, and you're going to have a password that gets you in to look at the market that you subscribe to. Okay? There's a minimum of 2 markets, so you'll have 2 passwords. One will show you the S&P, the other one will show you the Dow. It's all very fancy, has to do with IP addresses and whatnot, so we're just trying to keep up with the Jones. Now, the website address is going to be published tonight. I don't want to give it to you right now because I haven't quite finished it. And lo and behold, people will start emailing me on top of the emails I already have about, hey, I went to that website and it's not working. I know, because I'm not finished with it. I want to make sure it's 100% working. Now, it's not fancy, it's not flashy, it's not, and I don't want it to be. It's the purpose of that website is not to attract attention. That website is a repository of information. All right? And I'm able to do it in a way that's very safe, very secure, and it's going to be a snap for you. It'll take you 2 minutes to log in and get your trades for the day, whatever. Now, if you got 8, well, then you'll be able to get all 8. Whatever it is that you subscribe for, that's what you'll have access to. You won't have access to anything else. It's going to be just a streamlined process. Trust me, kids, you're going to love this. It's going to work like a charm. Okay, real quick, let's go over today's alerts on the S&P 500 last night. Whoops, that's tonight. Monday night, we said to consider being long above 2102 or short below 2091. Okay, so 2102 looks a little bit like this. 2102. Now, again, I'm not going to do a lot of explaining tonight. If you have questions, by all means, do email me, support@cfrn.net. I just want to walk through each market, show you what happened based on last night's alerts. Okay. On the trigger at 2091, it dropped exactly 8 ticks. The swing low you'll see right there is 2089. If you're a partner and working the 2420 blueprint, that's your goal for the day, 8 ticks, okay? On the long side, 2102, we hit a swing high of 2110 and a quarter. That's 8 1/4 points. Now, we didn't make 8 1/4 points available. The market made it available. What we did was we gave you an exact entry to the tick. Now, I want to point this out. It's really important, especially for those of you tomorrow that are going to start trading the one trade a day. If you had taken this trade based off the one trade a day, I will say, let me add this. For those of you that might be really brand new, when it says consider being short below 2091, what that means is 2090.75. See, in order to get short below 2091, you got to be 1 tick below there. All right? 2102, got to be 1 tick above there. Right? Okay. Now, check this out. Now this looks awesome, right? Dude, you nailed it. 2 points on the downside, 8.5 points on the upside. Wow, that rocks. Okay, it does. But there's more here that meets the eye. So this is the only one I'm going to just slow down for a second and try to explain. All right. If you set your line at 2090.75, 1 tick below 2091. Well, now that makes this swing low here 2089. The swing low is still 2089, but it's only 7 ticks away. Not 8. It takes 8 ticks to make a 2-point daily goal. With me? Now, does that mean you got shut out or whatever, or you lost a bunch of money? No. If you're trading by the 2420 blueprint rules, we move our stop to break even once we have 4 ticks profit. That puts us at break even. We have no risk on the trade. When we have 5 ticks profit, many of the partners and clients move their stop to +1. So not only do you have no risk on the trade, but you also just covered the commission. So that's a sweet spot. Go have a coffee, whatever. I recommend you sit and watch the trade. Those are my thoughts, but people will do what people will do. Okay, so is that the best you could have done is break even +1? Not at all. Once you have 6 ticks, well, okay, this is an 8-tick market, right? So once you have 7 ticks in the market, 7 ticks, I would be locking in 5. For it to go 8 ticks and give you your profit, 8-tick profit, it actually needs to go 9 ticks. Hopefully you understand that. In other words, it has to trade through the target to guarantee that you're filled. Like if it just goes down to the 8-tick mark and then runs the other way, some people may have gotten filled, not filled. If you're like me, you didn't get filled. It needs to trade through by 1 tick. As long as it trades through by 1 tick, then that's a guarantee that everybody who was in line got soup. That's an old Seinfeld joke. Some people get soup, some people don't get soup. If it trades through by 1 tick, everybody got soup. If you don't understand the Seinfeld joke, I'll explain it to you on the radio tomorrow. Okay, so that kind of explains this one. So you had 7 ticks. if you moved your stop loss up to 5, you got stopped out with 5 ticks of profit. Is that a bad thing? No, that's a very good thing. That's 75% of your daily goal. If your goal is to make $100 per contract per day based off the 24/20 blueprint, that's 75. Let me just say again, that's 75% of your day. If you lock in 5 ticks in an 8-tick market. All right. At the end of today's radio show, I did something. I'll show you as soon as we get to that market. I'll show you, and I hope it makes a ton of sense to you. Okay, now, what about here? Okay, 2102, actually, your entry, it says, the alert says be long above 2102. There's 2102 and a quarter. It triggered and drew down. How far did it draw down? Well, let's see. The swing low is 20.99. So that's 3 points. We only risk 2 points. You mean I got stopped out? Yeah. But I paid you for this alert. Well, I get stopped out too. So does Michael. And so does Bert. You gotta get this middle picture. The best trader on planet Earth will be profitable 7 out of 10 trades. It just doesn't get any better than that. Now, there are websites and all kinds of come-ons and emails that you get that try to convince you otherwise. Never be wrong again. Never lose again. Blah, blah. That's just not the truth about trading. I wrote an article the other day. I'll put a link to the article in this post with the video. You really should read it, okay? Because it's the truth. And if you know the truth, what do they say about the truth? It will set you free. So let's say that you took this trade and you got 5 ticks because you trailed your stop. Like I said, you got 5 ticks. Okay. So then you come over here and you get stopped out for 8 ticks. So you're now at -3 on the day. Okay. Now, we have a philosophy here. Important prices and important areas are almost always tested. Do you see how we did the 2091 dance twice here? Now look what happens at 2102. We go through it, we pull back, we run it again. Now it's on this second time. Okay. Now I should clarify that's -3 ticks. No. Yes, because we only risk 8 ticks. You picked up 5, so we're -3 ticks. Now this move up from 2102 to 2110 and a quarter, that's 8 points, all right? That's 8 points. $32 ticks. Okay. So, number one, you're not going to get out at 2110 and a quarter. Why? Well, the only way you would get out at 2110 and a quarter is if you set a hard target at 2110 and it traded up through there and clocked you out at exactly 2110. Most likely what will happen is you'll either hit your hard target of 8 ticks, and if you're trading multiple contracts, maybe you'll take part of your position off at 8 ticks, you'll trail a stop on the rest. The alerts that I send, I've been putting them out into the trading verse for 4 years now. They were tweets. After 3 years of public beta, they became the Concierge trade alerts. And I've given everyone over the past month a taste of them with the free trades. And now another iteration where you're getting, because a lot of people are saying, is there some way we can get some intraday trades? The trades you give us at night, they're great, but is there just, like something we could just kind of get down to business with in the middle of the day? So your wish is my command. So this is what we have. Now, so there was an opportunity to, worst case, absolute worst case, get stopped out at break even or break even plus one. There was the opportunity to get out with 5 ticks. Here, there's no doubt you got stopped out for 8 ticks. Now, we don't risk more than 8 ticks on a trade in our live trading room. Some of you who trade for larger targets may risk more. If you do, I'm just going to show you, okay, based on technical analysis. This is where the book, not our book, their book, this is where they would tell you to put your stop. If you're going to get long at 91, you need to be long. Oh, I'm sorry, that was to get short. Actually, if you're going to get long here, if you were getting long at 21.02, it's still about the same spot. Actually, if I were you, what I would do is I would break it down to a smaller time frame chart, because the idea is that if you're going long, you're going to get your stop below the last swing low. Okay, here I go into teaching mode. I said I wouldn't do that. Just come hang out on the radio show, and I'll do my best to help you as I do. On the Google Plus page, there are hundreds of hours of me teaching for free at the end of the radio show. We called it the after show for the longest time. I haven't had a lot of time for that of late, but I spent day after day, hour after hour. Look for the radio shows on the Google Plus page, and maybe there's somebody that doesn't know how to get there. Let me show you how to do that. Okay, just real quick. Go to CFRN.net. All right. And when you get there, up at the top, click Emini Radio Blog. Watch recent broadcasts. And as you can see, today's radio program, it's already ready to go. Now, if you click that,
Android phones, BlackBerry, and web,
that this file is 3 hours in length. As you scroll down and scroll down, you'll find files that are 4 hours, 5 hours, 6 hours. Those are the ones where I did some extensive teaching, technical analysis type training. Someday I'll pay somebody to curate and go through and cut out and cull and, stratify and file and organize, and that's not today. Just know that anytime you want to learn, you're in learning mode. Go to the Google Plus page, look for straight up video recaps, because in the video recap, invariably I always do some teaching. But look for the radio shows that are more than 3 hours, okay? 4, 5, 6 hours, chock full. If you go back to May of this year, you'll see a lot of recap videos, strictly recap videos without the indicators, just with the trade alerts. If you go back to Thanksgiving, around that time period of last year, you'll see a lot of recap videos, and these are recap videos. Some of them are 2 and 3 hours in length, and it's pure recap. There's no radio. It's me talking about trading, how to use the indicators, how to use the trade alerts, how to use them together in conjunction with one another. That Google Plus page, I'm telling you, It's as you scroll to the bottom, that's just it. You can't ever get to the bottom because as you scroll to the bottom, it grows. You scroll, it grows. All right. So the S&P, this was a great day. Is it possible that someone who hasn't yet learned how to trade could have ended up not making money with the S&P and these alerts? That's so possible. This is why you have to stay in SIM until you're consistently profitable. Now, that's something that we teach to the concierge clients and that we teach to the CFRN partners. But if you're going to partake in the one trade a day, if you really want it to work for you, you gotta trade it in SIM until you get the hang of it, okay? I don't know what else to say. That's the best advice I can give you. Now, look at what's happening. Price is coming back here. What do you think is going to happen? I'm not a prophet. I'm not making a prediction. What does it look like is going to happen? I never base my decisions on what it looks like is going to happen. I always base my decisions on what happened. As you learn to do that, you'll see the benefit and the difference. Okay? Okay, I drew some fibs here showing some stuff today during the show. That's another thing you'll learn in those after shows. You'll learn a lot about Fibonacci. That's not the latest thing to come down the pike. It's been around since, 1300s, 1400s. Last night's alert. Oh, this was a beautiful example of important prices, important areas being tested. Yesterday, on the bonds, we said to be short below 156.09. Actually, this was Sunday night. We said be short 156.09. Below it gave us 18 ticks in 2 hours. Okay. Now, overnight last night, look what price did. It came right back up. It touched 156.09. And then today's alert said to consider being short below 155.10. We put in a swing low at 154.15. Now, if we had gone all the way to 154.10, but we didn't make it all the way down. 154.10. The swing low was 154.15. If price had gotten down to 154.10, that would have been a $1,000 per contract move. But it didn't, and it wasn't. So what was it? Well, let's see. From 15 to 32, that's 17. That's a 27 tick move. And so 27 times 31.25, that's what the market made available off of our alert from last night. The only way you would get out at this swing low and take 27 ticks times 31.25 per tick is if you were psychic and had put a hard target one tick above the low, because remember it's got to trade through to make sure you get filled. Chances are you didn't do that. I didn't do that. How many ticks do you need if you're trading the blueprint? 4. 4 ticks actually pays you $125 a day. 3 ticks will pay you $90 and change. Okay? Crude oil. We said to be long above 46.45. First move gave us 19 ticks at $10 a tick. It's $190 per contract. Then the next move, important prices, important areas are tested, 20 ticks. And then it ran up 1,000 and made it to almost 2,000 a day. All right, stepped away, stepped back, pick up where I left off. Crude oil, had it got to here. $1 in crude from 46.45 to 47.45. It's $1,000 per contract. Okay. Didn't quite make the 2,000. But as a 24/20 blueprint trader, you only need 10. 10 ticks, done for the day. Euro. Okay. Be short below 10990. In this first hour, we got down to a swing low of 109.83. That's 7 ticks. The euro pays 12.50 per tick. You need 8 ticks to be done for the day. Important prices, important areas are almost always tested. Price comes up, triggers again. Price comes up, triggers again. The swing low of the day was 109.42. So from 40 to 90 is 50. So 48 ticks times 12.50 per tick is what the market made available. Again, if you're trading the blueprint and all you're trading is the euro, nothing else, you need 8 ticks. Okay? Soybeans. Soybeans were tricky today. We said to be short below 78, long above 82. Was it possible to get your points for the day on the short side? Yes, more than once. Was it possible to get your points for the day on the long side? And then some? Yes. Was it possible to get stopped out at break even or better on both sides? Yes. On the Dow, we said to consider being long above 17,770. And the swing high of the day was 17,897. So this should actually say 127 points. From 770 to 890 is 120. Yeah, 127 points. That's what the market made available. What you need at $5 a point is 20 points times $5 is $100 per contract per day. Okay? Okay. Just got 2 markets left. The Russell. We said in the alert last night to consider being long the Russell above 1187. Here's the trigger. Now in the first hour, we ran up to 1190.40. That's 24 ticks or $240 per contract in this hour. If we go all the way up to the swing high of the day, the market made 71 ticks available. This 22 points was from yesterday. So this was 71 ticks so far, and the day's over now, or 7.1 points. The Russell, there's 10 ticks to a point. Okay? All right, last but not least, gold. The alert said to consider being short below 1131.50. Right here at 1121.50, that's $1,000 per contract. If we had gotten all the way down to 1111.50, that would have been $2,000 per contract. But as you can see, the market turned up right here. Okay. Leg, retrace. Question is, do we put in another leg to the downside? Or is this more than just a retracement? Is this the beginning of a reversal? Come hang out with us tomorrow morning. I'll teach you how to tell the difference. One thing I wanted to show you on I use this as an example. If you go back to the radio show today, go to the recording that I've uploaded to the Google Plus page. Fast forward to about the last 15 minutes of the radio show, and I go through this in a lot of detail. I didn't know how this was going to look. All I knew was we were looking at this on the hourly, okay? And I was talking about using the indicators in conjunction with the alerts. And so I brought up a 6E at the exact same time. Here is the alert price. Bullish cross. Price pulls away. Price pulls back to physically touch. Down close. Sell the open of the next candle. The open of the next candle was one. The open was, stand by. Oh, come on. 110.17. Got too many numbers in there. There. 110.17. Now, with the euro, we only need 8 ticks. And so right here, this is 110.09. 9 and 8's 17. So if you got short on this candle, not the other one, bearish cross, price pulls away, price pulls back, down close, sell the open of this candle. So what's my point? Why am I showing you this in conjunction with the alert? The alert prices have a tendency to act like magnets, for lack of a better term. And so as price is heading down towards the alert to go short, you'll see here again the alert for the 6E was to be short below 10990. We bump it down that one tick to 989. So I've got my bullish cross. That tells me that I want to be trading on the short side of the market. The bullish and bearish cross tells us which side of the street we want to be trading from. Our trade setup: pull away, pull back, down close, sell the open of the next candle. Period. That's it. That's, you hear me say trading, it's not easy, but it can be simple. This is simple. Now you got two things working for you. One, this is going to act like a magnet and pull price down. That's good. You have a get short sell signal here. And so you can enter, get your points, and get out before you even get to the alert area. Or because you know that price, there's a high probability that as price gets closer and closer to the zone, that it's going to come and touch it. And that's what it did. And so this 8-tick trade, with that little bit of confidence, let's say you just stayed with the trade until you got your first close above the CFMA1. So that would be, the close was 11,002. So that's 15 ticks instead of 8 times 12.50 per tick. And you could have said, you know what, I'll stay short unless I get a close above the BBC. That's the bull bear cross. If you had done that, well, you can see. So I did that today because those of you that are going to start with the one trade a day, those of you that have the indicators, make sure you put them to use. Be aware if you're going long into a bearish setup. Okay? You don't want to do that. And I'll work with you some tomorrow in the after show. And then, of course, partners, I'll see you all Thursday night in the workshop. And for those of you that have not yet become a partner, go to cfrn.net/apply. And then check the Google Plus page later tonight, and you'll see the website address where you'll go tomorrow morning at 10:30 a.m. Eastern to get your one trade a day for whatever markets you've signed up for. Thanks so much. I'll see you at the bell.